makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Investors assess political volatility in France and elsewhere, while traders await decisions from major central banks this week. Now, the French far-right leader Marine Le Pen moves to calm markets, saying she will not try to push out President Emmanuel Macron if she wins France's snap parliamentary election. Plus, China launches an anti-dumping probe on pork imports from the EU as trade tensions between Beijing and Brussels ratchet higher. Well, let's take a look at the European markets map. And again, happy Monday, everyone. It's going to be a busy week, given especially all of that volatility because of the French elections. Now, European stocks are edging higher. If you look at U.S. futures, a little changed. Again, investors are really trying to assess this political volatility in France and elsewhere. For the moment, you can see the CAC 40 and other indices here in Europe actually holding on. Now, escalating concern about political volatility in France has really also spurred a flight to haven assets at the end of last week, with a gauge of global stocks also falling the most in 2 weeks on Friday. The spread between French and German bonds widening sharply. Now, let's look at cross-asset. The other things we're looking at, of course, is the French 10-year yield, 3.188 is what we're seeing. S&P futures practically unchanged, and then the U.S. 10-year at 4.2363. We're also getting a little bit of breaking news on a corporate, and this is Deutsche Bank. This is just crossing the Bloomberg terminal. Nord LB is withdrawing from the aviation financing business and will sell this 1.6 billion euro aviation loan portfolio to Deutsche Bank. So this is according to an email statement that just crossed the Bloomberg terminal. We understand that both parties have decided not to disclose the transaction price, but we know that the transaction is expected to be concluded in the second half of the year. So we'll keep, of course, a very close eye on this. New business activities in the aviation financing segment will be discontinued. And again, Nord LB withdrawing from this financing business and actually selling some of the loan portfolio to Deutsche Bank to the tune of almost 7 billion euros. Now, China's central bank has left a key interest rate steady for a 10th straight month. Now, this comes as mixed data out today showed house prices falling and industrial production slowing in May, but retail spending beat forecast. Now, let's get straight to Bloomberg's Rebecca Chun-Wilkins. Rebecca, good morning. So what's the key takeaway from, first of all, the May economic data?
Yeah, the May economic data really is focused on these weak property figures, really suggesting that the crisis is dragging on. And that's particularly prominent here, in part because there was hope that after China launched this $350 billion scheme to help with unaffordable housing, help mop up some of those unsold properties that we see across cities in China, that we would start to see some of an improvement in that specific area. Now, there was a little bit of a bright spot, as you mentioned. Retail sales, they accelerated for the first time since November. But overall, more broadly, we are still seeing from the May data this uneven model of growth, with exports and clean tech industries driving GDP, with those retail sales and consumer demand still quite a ways below the levels that we saw pre-COVID.
So meanwhile, Rebecca, China's launched an anti-dumping probe on EU pork imports. So is this a direct response to the latest EU tariffs?
It's certainly going to be viewed in that way, and in some ways it's no surprise, partly because in the lead up to that decision and the announcement of those EU tariffs, we did see Chinese state media, for example, and prominent experts sort of trailing the possibility of a response from China, including specifically a potential probe into pork. Now, there are other ways that that China can actually respond to the European Union's actions. They can, for example, also look to limit its own domestic access to its own domestic markets. For example, Germany still very much relies on access into China's domestic markets, even though overall we have seen foreign car makers reduce their position in China. But the probe into anti-dumping for pork in particular does suggest it's relatively muted at China so far. It only affects a relatively small portion of the trade between the EU bloc and China. So, we might see a more moderate response, although there is a sort of broader array of tools that Beijing can rely on here.
Rebecca, thank you so much. Bloomberg's Rebecca Chung-Wilkins there on the very latest with China, and we have had quite a lot of news out of China today. Now let's talk to Thushka Maharaj, Assets Solutions Strategist at JP Morgan Asset Management. Thushka, as always, thank you so much for joining us. I have a million questions on the U.S., on the Fed, but actually we probably have to start in a pretty volatile Europe. What will support a lot of equities in Europe going forward?
Hi, Francine. Thanks for having me on. I think the main underpinning for risk markets would be a stable economic backdrop in the euro area. We need that consumption or consumer confidence to return and consumption, domestic consumption, to support better growth prospects, but as well as nominal earnings. But as you highlighted, having stability on the political front would be I would call it a necessary requirement.
Thushka, how much volatility are you expecting because of politics, and does that change fundamentally your appetite for European equities?
Yeah, we are expecting volatility between now and the first round, and I think it will continue post that as well. We were actually turning more positive on European equity markets ahead of that snap election announcement, partially based on this view of a global goods cycle recovery. And I think that's still the case. We're still expecting an expansion in manufacturing activity in places like Germany. But I would say that the political uncertainty makes that harder to sort of position for time immediately. And then in terms of what we're expecting post the going into the election, I think, as everyone else is, we are watching those polls. We saw some data out today, but I think it's just too uncertain to have a strong view without knowing what the underlying policies are, where the coalitions are likely to form. So there are more questions at this point.
Thushka, I mean, away from politics, the European economy seems to be expanding once again. What does that mean for ECB policy and for growth in general for maybe some of the corporates?
Yeah, so we expect the ECB to be engaging in quarterly rounds of rate cuts. They've started that process. And it all depends now on the inflation outlook in the euro area. We'll get some inflation data this week. There's this tension between resilient and strong consumer service-driven inflation in the euro area. But I guess the question we're asking ourselves now is, what's the interaction of the political uncertainty and the ECB's reaction function? For now, our view is that the political volatility is focused in France, and it's unlikely to affect the ECB's policy in the very near term.
Thushka, any appetite for UK assets? Again, we're in an election year, but actually the polls are so wide apart. There's certainly not the volatility that we're seeing in France.
You asking about the UK asset market? Yeah, I mean, I do think there are opportunities in. Yeah, I do think there are opportunities in the UK market. I mean, it's hard to map the equity market directly to the underlying economy. But as you say, in comparative terms to the euro area, we have quite a strong pro-growth impulse expected for the UK post those elections. And so, ironically, the idea of more political stability in the UK will be viewed notably in comparison to what we're seeing in Europe at the moment, in the euro area at the moment. And so, yes, we are more positive on UK risk markets, but I do think that there's more uncertainty on the Bank of England. So if I compare the BOE to what we're hearing from the ECB, I think it would be unlikely to see them cutting rates preemptively in the UK at this point.
And Thushka, I know we'll spend a lot of time talking about the US next, but overall, is it a given, or do you think it's a given that we see a soft landing, or could we see a surprise in the US?
I mean, I'd say that the data is tracking quite closely to this idea of rebalancing in the labor market and the idea that growth remains resilient. So I would say it would be surprising to see the sharp turn lower in the US economy at this stage.
Thushka, thank you so much. Thushka Maharaj, asset solutions strategist at JP Morgan Asset Management, stays with us. Now, coming up, the French far-right leader, Marine Le Pen, says she will not push out President Emmanuel Macron as she leads polls ahead of the country's snap parliamentary election. More on how that's impacting markets next. And this is Bloomberg. Well, the French far-right leader Marine Le Pen says that she will not try to push out President Emmanuel Macron if she wins the country's snap parliamentary election. Let's get more from Bloomberg's Stephen Carroll. So, Stephen, good morning. This feels significant, but how significant are they, given we're also seeing a resurgence of the left?
Look, you have to look at the signals coming from this interview as well. Marine Le Pen very clearly pitching for the centre ground now. She knows that she's on the front foot in these elections as well. And the comments that she was asked in this interview with Le Figaro whether she would call for Emmanuel Macron to resign if her party came first. And in response, she said that she has respect for institutions. She will not call for institutional chaos, and there will be simple cohabitation, that word that we use in French politics to describe when we have a president from one party and a prime minister from another, essentially saying that there won't be any chaos if her party does win the election. So that's sort of a signal that she's willing to work with Emmanuel Macron and perhaps try to allay some of the worst fears that voters or investors might have about what happens if they come first, as they're represented in the polls. Interestingly, we are also waiting for details of the economic programme from the National Front. We know some measures of it, which include things like cutting the VAT rates on energy and on certain food goods, which would worry in a public finances point of view. But she says the financial markets don't understand their projects.
Retirement at 60 years old.
Yes, to bring back the retirement age, reverse the reforms there as well, and reverse some of the other reforms that Emmanuel Macron has put in place as well. Her word on that was financial markets don't understand their project, and that when they read it, they'll find it reasonable. So a signal coming there from her. The other signal that we saw from voters over the weekend were protests. Hundreds of thousands of people protesting in France against Marine Le Pen's policies. Not the numbers that we saw if you go back to 2002 in the protests against the far right, but nonetheless a part of this political conversation.
Yeah, I know a lot of insiders say the problem with this kind of cohabitation is that unless she really is to the centre, we won't have seen a president and prime minister with so different ideas of where to go next. What can you tell us about Macron's way forward? So if he's being attacked by the left and the right, is there any chance that he wins this?
Well, interesting, we've got some clues to the strategy this morning, actually. The French Prime Minister speaking on RTL in France, talking about them not presenting candidates in around 60 constituencies where they've left candidates who they feel are constructive, in their words, to run solely against the far-right or the left-wing candidates. That includes, by the way, the constituency of former Socialist President François Hollande, who re-emerged over the weekend onto the political scene, that he's going to run in his Corrèze constituency as well. So that's part of the strategy, is they're trying to be strategic, given that the polls put them in third behind the far-right and that left-wing alliance, which is also an important political player to watch. It's a hastily assembled alliance. Some of the measures involved in their programme, which we do have more details of, also could be of concern to investors. Again, rolling back the retirement reforms, rolling back some of the unemployment insurance reforms, the idea of fixing prices on certain essential goods, that could be of concern to markets too. Also, it's worth noting that alliance itself isn't terribly stable at the moment, and certainly what we heard from the finance minister over the weekend from Emmanuel Macron's party, Bruno Le Maire, talking about there being a threat from the left and the right. He says both the left and the right will leave French people poorer, and he still believes that there is a way forward and a potential victory for his party.
Stephen, thank you so much. Stephen Carroll there with the very latest, of course, on French politics. Let's talk more about market implications with Thushka Maharaj, asset solutions strategist at JP Morgan Asset Management. Thushka, we were just talking a little bit about it on Bloomberg's Michael Misika. Michael, when you look at some of the concerns, again, the markets really, A, were taken by surprise. Two, I don't know whether they're just looking at worst case scenario and whether at some point they temper, or are you expecting a lot more volatility?
Well, Francine, it's the first thing that I would say, and I said this earlier, I did not feel any sense of panic. Last week, what we've seen was like a trimming exposure, reducing exposure from investors that were highly exposed to European equities and to France, to banks in particular. And so, I mean, you have an uncertainty like that. You have like a very big surprise like that because no one was expecting Macron to call for snap elections. You reduce your exposure. That's how you do it. So more volatility, possibly, until we have the votes, and then we'll see what happens.
I know you also wrote up something by Liberum saying, look, markets don't have much to fear from France's elections. But then if you speak to people in France that maybe follow the markets, they're worried about a credit event, like our memory is cast back to Liz Truss quasi-quartang budget. Is there a danger that the Marine Le Pen party does something like that without the proper backing finances?
So, I mean, it will depend. Everything she's been doing recently was to try to ease the worries of the market. I think at the end of the day, every single party in France knows that the country has fiscal constraints. They can't do anything they want. The UK has learned that the hard way, and they will learn the hard way as well. Now, the difference between the UK and Europe is there are safeguards in Europe more than in the UK. The ECB is here. There's a lot of safeguards in place. They can buy a lot of bonds if needed. I do understand what the Liberum strategists were saying in the sense that you might have volatility, you might have some spikes, some investors trying to play that, but at the end of the day, there are things in place to prevent any credit events.
And Thushka, we talked a little bit about the French elections. We talked a little bit about this volatility. Where are we in the U.S. cycle? Because, of course, everything's linked. So we also have a big election in the U.S. Depending on where we are in the cycle, I guess markets could look through any volatility in Europe.
Yeah, Francine, I'd say the volatility we've had in Europe is basically reinforcing the idea of U.S. exceptionalism, in our view, in many respects. One, economically. Secondly, in terms of the U.S. dollar. So volatility in Europe does get expressed through the euro, especially political volatility. And I'd say this reinforces the view that the dollar remains strong. We remain positive on risk assets in general, but most especially in the U.S. large cap market because of secular forces, but also that underlying underpinning from earnings momentum.
So how do you build a portfolio based on U.S. assets, Thushka? I know high yield is something that's been quite talked about. Where do you see it? Are you constructive?
Yes, actually, our highest conviction view is in carry, in the quality components of high yield. I know when you optically look at the level of spreads, they look tight, and that's mostly because of higher core government bond yields. We're not expecting spreads to tighten significantly below 300 basis points in high yield terms, but we are expecting to earn the all-in yield, which is still very attractive to us in the US. I would say that theme also applies to the euro area, this idea of carry, but as your speaker already noted, what the market's doing is reducing leverage in carry positions, and so we still expect that volatility in European fixed income and especially European credit to continue. Again, it just makes the US look more attractive.
Thushka, thank you so much. Thushka Maharaj, their asset solution strategist at JP Morgan Asset Management, and Bloomberg's Michael Misika joining us on Europe as well. Now, coming up, Fed policymakers say they want more evidence that proves stubborn inflation is well on its way to 2% before cutting rates. More on that next, and this is Bloomberg.
It's going to take some time to get inflation back to 2%, all the way back. So my projection is that we probably won't get there until 2026, but we'll see progress continue in my modal view. And that's enough, right, to then say, okay, it's time to start the process of bringing rates down.
Well, that was U.S. Regional Fed President Loretta Mester speaking to Bloomberg about the central bank's looming interest rates decision. Now, UBS says it will give investors in Credit Suisse funds linked to the collapse of Greensill Capital a significant proportion of their money back. That's as the Swiss bank looks to clear through the legacy issues of its former rival. Now, the collapse of a $10 billion group of supply chain funds linked to Greensill in 2021 contributed to the demise of Credit Suisse. Now, Bill Gates says he's prepared to plunge billions of dollars into a next-generation nuclear power plant project to meet growing U.S. electricity needs. Gates' startup, TerraPower, broke ground for construction of its first commercial reactor last week in Wyoming. Now, TerraPower's plant, backed by the U.S. Department of Energy, was initially slated for operation in 2028, but would have required reliance on fuel from Russia. Well, Gates told CNN that was unacceptable now. And Hong Kong and Singapore have been named the world's most expensive cities for expats. Now, the rival cities top Swiss destinations Zurich, Geneva, Basel and Bern. That's according to Mercer's 2024 cost of living report. Now, the report says rising housing costs and the cost of living challenges have had a significant impact on expat workers' compensation packages. Coming up, trade tensions between Beijing and Brussels ratchet higher as China launches an anti-dumping probe on pork imports from the EU. We'll have a full story next, and this is Bloomberg. Investors assess political volatility in France and elsewhere, while traders await decisions from major central banks this week. French far-right leader Marine Le Pen moves to calm markets, saying she won't try to push out President Emmanuel Macron if she wins France's snap parliamentary election. Plus, China launches an anti-dumping probe on pork imports from the EU as trade tensions between Beijing and Brussels ratchet higher. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, China has launched an anti-dumping probe on pork imports from the European Union. This as trade tensions rise between Beijing and Brussels. Well, Bloomberg's Oliver Crook joins us from Berlin. Ollie, thank you so much for joining us. If you look at the pork investigation, how much does Europe sell to China, and is this really retaliation?
Yeah, this is basically fully retaliation for the EV tariffs. There were sort of rumblings within Chinese media within basically 24 hours of the EV sort of tariffs being announced that maybe pork would be the sort of way in which China would retaliate. And it seems from the Ministry of Commerce we've learned today is exactly how they would retaliate. So when we look at sort of the Chinese imports of pork, it's about 1.55 million tons every year. About half of that comes from the EU, mostly from Spain, some from Netherlands, Denmark. These are all the sort of sensitive sort of pork markets where that's involved. But really in terms of trade, it's only worth about 1.8 billion versus, almost $250 billion of trade. So this is still a fairly measured take so far because, of course, for China, they also produced about 60 million tons of pork last year domestically, so less than 1 million coming from Europe. I mean, this is also kind of taking into account that obviously whenever you throw up trade barriers for a lot of these things, you could also potentially stoke inflation. So for the moment, it's quite surgical and precise. What we look forward to, though, Francine, is this just kind of the beginning of what we could be, walking in towards a trade war? We're still waiting for the Chinese. Are they going to retaliate on, say, auto sector for Europe? Because remember, the most expensive cars that the Europeans sell, like the Mercedes Maybach and all these sorts of stuff, that's built in Europe and then shipped over to China. So we're still waiting to see what form the retaliation takes.
So all EU leaders are also meeting in Brussels to discuss distributing the top jobs. What do we know?
Yeah, that's right. So this is going to be their first formal meeting since the election. EU leaders this evening in Brussels to really talk about who goes where. And really, this is sort of interesting with this trade dynamic with China as the background for this. The EU really needs to reform its sort of entire government. And there were some real questions about Ursula von der Leyen and whether she could kind of claim the top job going into this election. After the outcome, it looks basically assured that Ursula von der Leyen will remain as the sort of Commission president. We're also looking at sort of Antonio Costa to take up the European Council from Charles Michel. But then most interestingly, perhaps, is the Estonian Prime Minister, Kaja Kallas, who's been very, very outspoken on Russia and Ukraine. She is likely to take the sort of role as the top diplomat within the EU. So that should be very interesting, particularly around all the conversations around defense. And potentially, could you, Francine, in the next few months, see a European sort of defense commissioner? This is a conversation in Brussels that does not exist currently.
So when you look at Ukraine, there was, of course, this meeting over the weekend that was extremely important. The President Vladimir Zelensky's bid for support from the global south against Russia hit a bit of a snag. What happened?
Yeah, exactly, Francine. I mean, off the heels of the G7 meeting, we should just say that for Ukraine, really the prize was getting that $50 billion from, the sort of frozen Russian assets from the G7. That went through. That was the most important thing that happened. On the diplomacy side, things got a little bit more complicated because remember, before the Swiss summit, we also got sort of Putin's lists of demand for what would be required for Russia's, side on peace. Basically, it involved forfeiting the entire east of the country and a commitment from Ukraine to not join NATO ever, right? These are total non-starters for Ukraine. And so in the context of sort of the diplomatic side, you basically have the demands of Ukraine and Russia, a sort of Venn diagram with zero overlap. And the difficulty that Ukraine is having, despite having gotten those funds in, is sort of not winning more countries from the global south and those that are a bit more ambivalent, not really signing on to a communique over the weekend from the Swiss summit, basically just trying to bring people together to begin to talk about sort of language around which a peace negotiation could move forward. And really that hit a complete standstill from those who were not really committed to Ukraine from the beginning anyway.
Ollie, thanks so much. Oliver Crook there in Berlin. Now, less than 3 weeks before the UK's general election, Labour has extended its lead over Rishi Sunak's Conservatives in 2 recent opinion polls. Now, the opposition appears on course for a large majority after the vote on July the 4th. Speaking to Bloomberg, the leader of the Liberal Democrats has set out a path for the UK to rejoin the European Union single market, saying businesses need closer ties to prosper.
We're the only party talking positively about engaging with our European friends and neighbours. We're talking about rebuilding that trust and relationships that have been so poisoned by the Conservatives. When I talk to businesses, they say we're not investing in the UK because there's no long-term strategy, there's no real link up with Europe, and people are taking their money elsewhere. And I think that's really sad. And under the Liberal Democrats, you'd get a long-term, stable policy. And we're so committed to that stability, so we could tackle these issues about the problems with regulators, get better trade deals. That's the sort of climate that would attract investment. When we were, for example, in government and running the energy sector, we saw tens of billions of pounds invested in the UK because of Liberal Democrat policies. We introduced contracts for difference, which were transformative in improving our electricity system and making it go low carbon. And that system of financial instrument was copied the world over. So I'm really proud of our record, I'm proud of our policies, and I'm particularly excited because in places like this, maybe a bit windy and a bit blowy and a bit rainy today, but the sun is shining on the Liberal Democrats.
I'm just waiting for the thunder to start, just to add to that chorus that you're speaking about. So basically, I can say with a degree of certainty after having heard what you just said that a vote for the Liberal Democrats is a vote to rejoin the single market. Is that pushing it too far, or is that fair to say?
Well, what we are saying is that we're realistic about the time scale for that. It can't be done overnight.
Yep.
We've got to rebuild that relationship with our European colleagues. When I've spoken to European politicians like Christian Lindner, the finance minister of Germany, he says, look, there is a trade on the table. It falls a bit short of the single market initially because I'm afraid European friends don't quite trust the UK any longer. And who can blame them, given the way the Conservatives have broken the rule of law and treated our European neighbours? So we've got to build that friendship back. You can do that with a good trade deal to start with, and gradually over time you have a 4-phase process that could get us back into the single market, but it may take a while.
Well, that was the UK Liberal Democrat Party leader Ed Davey speaking with our very own Guy Johnson. Now, coming up, the climate crisis, Gen Z, and the green jobs for the future. We discuss all of that with LinkedIn's head of global public policy. That's coming up next, and this is Bloomberg. Now, Britain's Met Office says the UK has seen its 6th wettest spring since records began in 1836. Now, the climate crisis is, of course, one of the biggest global challenges, and it's a growing source of anxiety for younger people looking to enter the workforce. Now, 73% of Gen Z say that they are more worried about climate change than 1 year ago, but they're struggling to get jobs in the sector and don't have enough green skills. Now, that's the finding of a new report from LinkedIn. So let's discuss all of this with the company's vice president and head of global Public Policy, Sue Duke. Sue, as always, thank you so much for joining us. So this is a very important and interesting report. It basically says, young people are worried about it, but they don't really know how to get into these jobs.
That's right. Young people are telling us they really want to work in this space. They have the appetite, they have the passion, they have the commitment. But we have two problems. We have an awareness problem. 4 out of 5 of these young people are telling us they just don't know how to break into these roles. And we have a skills gap. Only 1 in 20 Gen Z workers today have green skills. And that means despite that appetite, they are really struggling to break into these roles. And we need to ensure that we're putting in place the skills programs that will allow them to not only power their careers, but power this transition to net zero as well.
Yeah, so it's really, interesting what you say. It's basically a lack of job availables, it's a lack of experience and a lack of green skills. And yet a lot of Gen Z are ready to learn these new skills. I think your report says 8 in 10 say they could pick up some of these skills if they were offered training. Are we seeing training?
We're not seeing enough training. You're absolutely right. 8 in 10 of them are telling us if I get the green skills training, I'm confident I can get one of these jobs. But 4 in 5 of them are telling us I don't know where to get this training. And the issue that we have is that when they look to go to get these skills, they're not available through the companies they're working for, and they're not being put in place by governments. So what we need is both governments and the private sector really investing in upskilling these young workers and making sure that they can get these skills, because as these young people tell us, that is going to be really good for their careers and it's going to be really good for the planet as well.
So, Sue, again, at the current rate of progress, how many Gen Zs will have green skills in 15, 20 years, when I guess some of these skills are needed most?
2030, a key staging post for us on the way to net zero by 2050. By that stage, 1 in every 3 workers will be Gen Z, but only 1 in every 10 of those workers will have green skills. That's at the current rate of growth of green skills. And that tells us that it's now we need to act. We need to ensure that we tap into that passion, that potential, that eagerness to work in this space that young workers clearly have, and put in place these programs at a scaled, fast rate so that we can tap into that potential and drive forward this transition.
Sue, I think when you look at the workforce, I mean, Gen Z kind of make up, 24% of the workforce right now?
Right.
Are they finding the right jobs?
They are really struggling to break into these green roles. So when we ask them, what are the barriers facing you? 4 in 10 of these young workers tell us, I'd love to get into this space, but I'm not able to get the access to the training right now. So ensuring that we are helping them get this training, get those skills that they need. Again, often we're talking about 2, 3 green skills that will allow them to get that first role in this space, allow them to get that foot on the ladder. That's what we need to do to ensure that we're allowing them power those careers forward and be in a spot by 2030 where we're getting to grips with this skills mismatch.
But what are the skills needed? Is it digital? Is it STEM? Is it common sense? Sue, are green jobs that different to any other job?
There's 2 key categories of green skills that are right now high in demand. The first is around the rollout of that energy infrastructure. So wind panel installers, solar panel installers, energy engineers. We need a ton of workers moving into that space. And the second key area that's coming through consistently strongly is around the oversight and regulation of emissions, carbon credits, energy audits. They're key skills, key roles where we see high demand and where we need to be encouraging young people to get those skills, get into those roles, start rolling out this infrastructure and doing the work that needs to be done.
So we've also heard about the phenomenon of Gen Z quiet quitting, right? Doing the minimal work possible. Do you see it across LinkedIn? Is it something that's sizable that you can measure?
not in this space. Our research today tells us that young people are saying, I am willing to work hard to get into this space. 2/3 of them are telling us, if you give me the training, I will get one of these roles. I am confident that I can do well in these roles, and I see myself working in these roles in the next 5 years. So the passion is there, the energy is there, the work ethic is there. Again, we have to tap into that to make sure that we're leveraging all of that passion, all of that awareness, and all of that eagerness to work in this space and make a genuine contribution to the transition to net zero.
So what about AI? So can it help drive up worker productivity in the UK, or does it actually take away some of the jobs that graduates in the past had done?
We're already seeing AI have a positive impact. Two key areas where we see that playing out across the economy. First is in AI technical talent. So the workers who are building AI, there we are seeing enormous increases in the demand for that talent over the past couple of years. And secondly, a broader transformation across workers who are leveraging AI. There we are hearing from workers, fully 3 in 4 of desk workers are already using AI, Copilot, ChatGPT in the workplace to get those productivity gains, to do those routine tasks, and to free them up to do that more valuable human work across all sectors of the economy.
So can AI also help bring more UK workers, I guess, back after COVID and long COVID?
We see that workers are really embracing this technology, again, not just in the tech sector, but across all sectors, retail, real estate, construction. What we see is that workers are embracing this technology because they see that it can take some of the routine tasks, some of the monotony that we all have to do day in, day out in our jobs. And that means that these workers can go back to work and really do the valuable stuff that they enjoy, the strategic work, communication, leadership, team building. And so we see huge potential for this technology to be embraced by workers and have them enjoy their roles and add more value to their roles across the board.
And so we were talking about the fact that, really young workers are entering the workforce at a difficult time. And there's also a mismatch between starting salaries and, I guess, the cost of living crisis. So what kind of advice would you give today to a young worker wanting to enter the workforce?
This area, the acquiring green skills, is an area that can only be good for your career and can only be good for the planet. One of the main drivers that workers are telling us is pushing them into this space is, yes, I want to protect the planet. Yes, I want to advance in my career, but I also see a prospect for a higher salary in this space. So starting out on figuring out what role do you want to play and figuring out what that role is, figuring out what are the skills, the specific skills that you need to break into that role. And thirdly, think about your network. There is a huge, vibrant community out there on LinkedIn that can give you advice, help you figure out what skills you need, and get you started on your career in the right way.
Thank you so much for everything, Sue Duke, there, Vice President and Head of Global Public Policy at LinkedIn. And now coming up, traders are eyeing decisions from the Bank of England, SNB and Norges Bank this week. We'll break down what you need to know ahead of Thursday's trio of meetings. That's next, and this is Bloomberg.
Rihanna making Shandong crepes. Apple offering its biggest ever iPhone discount. And an AI-powered avatar of JD.com founder, billionaire Richard Liu. All in hopes of standing out and getting consumers to spend. Similar to the Double 11 shopping holiday invented by Alibaba, 618 is JD.com's version of a month-long discount spree ending on June 18th. This battle for the consumer dollar has taken a hit in recent years as the slowing economy has turned Chinese consumers into more selective shoppers, making the price point for products even more of a focus.
Consumers are still buying. They're buying cheaper things. The average ticket size is coming down.
They are still going with some of the low price strategy out there.
Smaller companies are now competing in the same space thanks to China's anti-monopoly investigation into Alibaba in 2020. Douyin, Kuaishou, and Little Red Book have joined in the e-commerce game, Douyin leading the charge with 70% growth in GMV year-on-year, Alibaba and JD.com trailing behind in single-digit growth. The smaller upstarts have forced Alibaba to rethink strategy, founder Jack Ma calling on employees to think outside the box. The result, a partnership with ByteDance's own Douyin, allowing merchants to advertise on the video platform and make transactions on Taobao. But even with the intense competition, consumer spending still cooled in recent months, and the platforms are hoping to reverse that during these key shopping holidays. Min Lo, Bloomberg News.
Well, that was Bloomberg's Min Law on the battle for shoppers during China's 618 e-commerce festival. Now, a run of key central bank decisions this week should, of course, shed light on who's joining the global interest rate cutting cycle. With a looming UK general election, the Bank of England looks likely to hold rates steady at 16-year high when it meets on Thursday. Well, let's bring in Bloomberg MLife strategist Ven Ram in Dubai. Ven, thank you so much for joining us. Look, data forecast to show CPI falling from 2.3% in April. The BOE, I guess, expected to maintain its benchmark rate because we're in an election cycle.
Absolutely. Morning, Francine. I mean, it's a gripping week for central banks and for the markets. For the markets because of the French political risk that you mentioned, and for central banks because we've got a slew of central banks meeting this week, not least the Bank of England. Then we've got Norway, we've got the Australian Central Bank, as also Switzerland. I think that the Bank of England is unlikely to do anything particularly because we've got the elections coming up. But the question for BOE is really what lies in store beyond this month. As you mentioned, inflation is likely to soften this month, but the Bank of England already was expecting that. So the question is, what happens to inflation numbers in the UK beyond the spring? The BOE expects them to accelerate afterward. So it is more than it is going to take more than just one softer print for the BOE to be convinced that it can go ahead and cut rates.
So, I mean, this is one thing, of course, that we need to keep an eye on. And, whether a lot of investors miss the fact that the BOE speeches are not there is one also of the big question. Does it make it easier just to look at the data without the speeches? Absolutely.
Investors are left to pass their own reaction function. And if you look at gilt yields, at the moment, they're kind of in undecided territory because there was this momentum towards lower yields that has waned. So I think that the markets are going to wait for a clearer signal to emerge, and that will only come after the elections, as you say. So it's going to be a waiting game for the markets. Traders are thinking that we'll probably get 2 rate cuts from the Bank of England. I would err on the side of caution and think more that one is likely.
Very quickly, Ven, what's your take on French assets?
Well, I think that, French assets, I think that the yields will kind of climb slightly more from here because I think that, we haven't priced in the full scale of risk. And of course, part of the problem is we don't know the scale of risk. Who's going to come to power and what is their fiscal policy going to be? The S&P already expects French deficit to widen in the coming years. So if it emerges that it's going to widen even more, then there's some more risk to be priced.
Ven, thank you so much. As always, Bloomberg MLife strategist Ven Ram. The Brief, it's up ahead, and this is Bloomberg.